Hey guys, Joel here again with the Advantage Group, again with Cole Williams, lender with Revolution Mortgage. Hey Cole, what is up?
Same old, same old. Just trying to stay busy at work. How about you, Joel?
Just staying busy, about the same, brother, doing my best. All right,
Good,
today we're
good.
talking about different types of loans. So I know there's a bunch of types of loans, whether it be jumbo loans, business loans, things like that. We're just going to focus on the four main types of loans that I primarily work with buyers and helping them understand the difference. Of course, the loans that I'm speaking of is the FHA, the VA, the conventional, and the USDA.
Yeah,
And Cole, when you speak with a buyer, basically you're talking to them and not only about the property, the type that they're looking at, which might only qualify for a certain type of loan, but also their specific, what's best for them, right?
that's right. Absolutely.
All right, cool, cool. All right, great. So, let's get started let's start with FHA. What is an FHA loan, and why is it good that a buyer might consider that for purchasing a specific property?
Yeah, so I feel like the FHA loan itself, along with the VA and USDA, actually get a bad rap. People think because it's a lower
Hmm.
down payment that the person's less qualified, but it is a great first-time homebuyer loan program.
Hmm.
Everybody can imagine. I'm not sure very many people are able to put 20% down on the
Yeah.
first home they purchase. So
Right.
that's 3.5% down. It allows
Okay.
the FHA has a lot more leniency on like short sales, foreclosures, major derogatory events that have taken place in a person's life. The
Okay.
time period to season is much less.
Hmm.
Credit scores can be a little bit lower, but the major thing is the interest rates for average to lower credit scores are much, much better than conventional loans.
Okay.
And so we typically put a lower credit score, which doesn't mean they're less qualified. They're still qualified. It just
Right.
doesn't impact them as much with their interest rate with an FHA loan. So we'll stick that type of client in an FHA loan itself. There are no additional requirements that the appraiser has to do or anything like that.
Oh,
There's a
really?
big
Okay.
misconception um, in that every home that you purchase, no matter what loan program there is, the home has to be habitable. You have
Yeah.
to be able to live in it.
Yeah.
And sometimes,
That's always a good thing.
yeah, for sure. But a lot of times people will say, hey, there's a couple of issues with some flooring inside the home or the carpet stained. We can't go FHA.
Mhm.
That's not necessarily the truth. Basically, you just want to make sure the roof isn't leaking, the electrical's good, the plumbing's good, and the foundation is good. That's really all the appraiser is going to look at. They're not going to dig into the
Okay.
weeds like a lot of people think.
Sure. Yeah, gotcha. So even if a buyer with an FHA loan buys a property as is, it would still need to pass the FHA inspection, which is done by the appraiser. Is that correct?
That's right. Yeah, but a conventional
Okay.
loan is the same way. That's where the misconception kind of gets into
I didn't
play. Like
realize a conventional loan had an inspection. Okay.
yes, yes. So the appraisers do basically the same inspection on a conventional loan as they do an FHA loan.
Oh, really? I wasn't
Yeah.
aware of that. Okay. Gotcha. So what would the benefits be of an FHA loan? Pretty much from what I'm hearing is the lower interest rate, 3.5%, and buyers would be able to qualify perhaps with a less credit score. Is that correct?
Yeah, so FHA is, the Federal Housing Administration, and it's secured
Hmm.
by the federal government or it's insured. So that
Hmm.
loan is insured to allow lower income, lower credit score people to be able to buy their first home. And so they,
Hmm.
they allow them to do that with only putting 3.5% down, having a fixed rate PMI. Um,
Hmm.
so that's the reason we would put them in an FHA loan.
I gotcha. Going on to the VA loan, is that government backed?
It is. It's backed directly
Okay.
by the VA, and
Okay.
what that's backed by foreclosure. If there is God forbid, a foreclosure on the property, the lender is insured. So that's why VA and
Hmm.
FHA loans interest rates are a little bit better because
Okay.
they are
Gotcha.
insured for
So
the lender.
yeah, let's talk about VA loans. Obviously, a veteran qualifies for that. But let's talk about how they qualify. I mean, do they have to be in a specific war or just any branch of the service?
Any branch of the service, any six
Okay.
branches of the service. Also, yeah, there's another small entity that isn't actually part of the military, but they qualify as well. But
Okay.
In order to qualify, they have to do 180 days of active service. So if they're a
180 days. Okay.
reservist, if they're a reservist and they were never called to active duty, they would not qualify for the VA home loan. But if they were a reservist and they were called up, and this doesn't include their weekend and 2 weeks a
Hmm.
year, this would be where they're called to active service,
Hmm.
180 days, then they do qualify.
Okay, gotcha. And I know you were in the military, in the Marines, I believe. So
Yes,
just want to take the time to, of course, thank you for your service.
appreciate
And
that.
let's talk about interest rates for the VA loan. Are they similar, same as FHA?
Yeah, the rates are very close to one another.
Hmm.
Sometimes VAs, in the market we're in right now, the rates are very similar. Sometimes in different markets than we're in today, VA will get a little bit better than FHA,
Hmm.
but they're historically pretty close to one another.
Okay, I gotcha. So benefits, obviously, of doing a VA loan. Now, let's say someone was approved for a VA, approved for an FHA. I mean, obviously, the specific buyer, there might be a preference as to why they would choose that. But let's say, um, everything was the same. Would there be a benefit of going one over the other, or are they pretty much the same?
No, the VA is so. As you know, I was in the Marines and I'm a
Hmm.
veteran, so I qualified. The home loan that I'm in, my primary
Hmm.
home, is a VA loan because I do believe it's the best loan in America.
Hmm.
It's zero money down, so it's 100% financing, so they wouldn't
Hmm.
have to put that 3.5% down. But
Okay,
there's also
gotcha.
there's there's no PMI for putting
Oh, I
less
didn't
than
realize that.
20% down.
Okay.
Yeah, so there
Wow.
is a fund.
Okay.
Yeah,
I'm learning
yes.
things.
Well, hopefully that's why we do the videos, right? Yeah, so there's no PMI, so it's a really good loan
Gotcha.
program, and
Yeah.
I can't tell you how many veterans are sitting with hundreds of thousands of dollars in their bank account, and they use a VA home loan because
Sure.
they want to leverage their money on the stock market or some other way, than putting the money down on their home.
Yeah, no PMI can mean a big difference, especially in the buyer's purchasing power if they're not having to pay that per month. Cool. All right, let's talk about conventional loan, what that is like, if there's any specific qualifications for that besides, the normal debt to income ratio and credit score and things like that.
Yeah, so the debt to income on conventional loans are lower than FHA and VA.
Okay.
So it's a little more restrictive. Some of the guidelines are a little more restrictive with major derogatory events, like I spoke about
Hmm.
before, foreclosure, bankruptcy.
Hmm.
They may look at income a little bit differently than VA and FHA.
Okay.
But one thing to keep in mind, we haven't covered it yet, but I'll go ahead and lump this one
Hmm.
in. All the government
Sure.
loans, VA, FHA, and USDA, are only eligible for primary homes.
Okay.
So you
Yeah, let's
can't
talk
have a
about
second home.
that.
Yeah,
Obviously, oceanfront condos, we have a lot of those in the
sure.
area, as well as, golf course condos and townhomes, things like that.
Right.
And not all of them qualify. Certainly, the oceanfronts wouldn't qualify for an FHA or VA,
Right.
and not all townhomes and condos qualify.
That's right.
So
So,
you run
so
into
the
that a
way
lot, I'm sure.
one thing it's important for realtors to take a look at is to see
Mhm.
if the veteran or the home buyer owns the land that they're buying. So if it's a
Okay.
townhome, it looks like a townhome, but it's deeded like a condo, meaning they don't own the land beneath it.
Mhm.
It's most likely not going to be eligible for VA and FHA.
Mhm.
So that USDA as well. So you want to make sure they own the land that it sits on. Otherwise, there are some lists you can get to see if it
Mhm.
is eligible, but
Sure.
chances are they're not going to be eligible.
Yeah, absolutely. And even if the condo development or townhome development has the townhome name in it, right, doesn't necessarily mean it's a townhome. I had an offer on a property that had the townhome name on it, but it wasn't on the FHA list
Correct.
as a townhome. So you got to be careful in that respect as well. Okay. And the last type of loan we're going to talk about is the USDA loan. So when I think of USDA, obviously what comes to mind is rural areas. So let's start with that.
Yeah, so USDA is a fantastic loan program.
Hmm.
It is only eligible in rural areas. So within 5 miles, you can't have a population of over 35,000 people. That's kind of the guideline for them.
Okay.
So like the Myrtle Beach area, Carolina Forest, Pawleys Island, Merle's Island, those all have populations much higher than that. It's not
Sure.
eligible. So you've got to get out really towards the country, Conway, Loris, Longs, where there are no major metropolitan areas and they become eligible. It is 100% financing. It is
Mhm.
much more restrictive than any other loan program when it comes to credit score and debt to income. They really
Okay.
limit who's eligible for that.
Hmm.
Additionally, they look at the overall borrower's net worth. So I've actually had a borrower who had about $30,000 or $40,000 sitting in their checking account. USDA looked at the loan program, said yes, you are eligible. However, you have enough money for a down payment, so you're not going to be eligible for USDA.
Oh, wow. Okay.
So you really want to make sure you're working with a qualified loan officer that can make sure that your borrower is qualified for the USDA loan program. It can't just be anybody just not wanting to put money down on it.
Yeah, I gotcha. And I know you mentioned Conway, and of course, we work with a lot of buyers in Conway, Longs, Little River, Loris, outside in perhaps those USDA areas. But I'm sure even parts of Conway close to Myrtle Beach wouldn't qualify. Is that right? Just because you're in a specific zip code doesn't mean you qualify.
That is right.
Okay.
Yeah, and again, there is a map you can go to. The map,
Oh,
you
really?
type in the address, and it'll tell
Okay.
you, hey, this is USDA eligible.
Mhm.
Maybe I can get the link for you to share at the bottom,
Sure. Yeah,
Joel.
absolutely.
And that's something, a good, useful tool for a realtor or a buyer that's wanting to, maybe they don't have the means to come up with a 3.5% down for FHA and they are qualified.
Mhm.
Finding a house that is in that area would be ideal.
Okay, fantastic. All right. Well, those are the four major types of loans that I deal with. I know you deal with a lot more in ARMs and refis and jumbo loans and things like that. But those are the four ones that I deal with and most of my clients have. So I just wanted to cover those: the FHA, USDA, conventional, and VA. All right, cool. Thanks so much for your time and the useful information. How does a buyer connect with you?
Yeah, so they can reach out to me on my cell phone. It's 843-267-7009. They can send me an email. It's cwilliams@revolutionmortgage.com, or my website, which is revolutionmortgage.com/cwilliams.
Cool. And we'll put that information below. All right, brother. Until next time, thanks again.
All right. Thanks, Joel.
Talk to you.